All right, the markets, they may have shrugged off European debt crises today, but there is much more at stake than the risk of a Greek default. Standard & Poor's has already lowered Italy's credit rating, adding to the debt risk in the Eurozone. So who is next? Can the crisis be contained, and how is it going to affect the markets? We've got a taking stock think tank, Charlie Biederman. He's the chief executive of TrimTabs Investment Research. He joins us from San Francisco. Also with us, Larry McDonald, senior director, credit sales and trading at Newedge USA. And we have Jonathan Henes. He is a partner at Kirkland Ellis. Gentlemen, good to have you with us. Here's the joke of the day, Charlie Biederman. How many Eurozone finance ministers does it take to screw in a light bulb?
17.
No, the answer is none. There's nothing wrong with the light. All right, Charlie Biederman, is there something really wrong in Europe, and can it be fixed by an infusion of cash from the European Union, the European Central Bank, and the International Monetary Fund?
Well, one, they owe too much money. Two, the economies aren't growing. Three, they're shrinking, not growing. And four, there's no solution in sight to the mess.
All right, so he's got four. Larry McDonald, do you agree with Charlie?
Well, if we take one thing from the failure, from the aftermath of the failure of Lehman Brothers, is the only way to contain something like this is, number one, a powerful solution, a TARP-like solution, number one. And number two, a controlled unwind. Lehman Brothers destroyed the global economy because the unwind was reckless, okay? It was like an 800 billion pound domino that hitting the water, and the waves across the world hit distant shores and damaged them. But in terms of the unwind, the unwind was reckless. Here, we need that same solution in Greece. You need a TARP-2 with potentially a G7 backing with maybe a BRIC country, and then you need a controlled unwind of Greece. That's the only way we get out of this.
Jonathan Henes, do you agree? A controlled unwind having to do with Greece? I mean, aren't there connections to the banking system that go far beyond just an 11 million person country like Greece?
Yeah, I mean, this is a much larger issue than Greece. And to have an orderly unwind or an orderly capitalization and restructuring of the debt of Europe would be a good thing. But it's an incredibly difficult thing to do. If you think about it, what's going on right now is you have the Troika, and they're pushing Greece to cut spending, to lay people off, and to raise taxes, right? What that causes is economic decline. It's not doing anything to fix the debt problem. The only way to fix the debt problem is to reduce debt. But if we're going to reduce debt, then what you end up having is you've got a bank issue, a bank crisis perhaps, because they need to be capitalized. So you need to figure out how to capitalize them. Add on top of that you have 17 Eurozone countries. If we're going to bring one of the BRIC countries into it, now you're adding somebody else in the politics around it, and it looks like a very difficult situation that's probably not going to have a great ending.
Charlie Biederman, can you really have an orderly unwind? I mean, if you have banks that owe money to their customers and they can't pay, then they've got to go looking for more money, and banks aren't going to lend to each other. How do you have an orderly unwind when you have this cascade effect?
It's a systemic problem, what's really going on. For 10, 20 years, Europe, at least since the euro started really in 2000, that you can increase debt infinitely and not have to worry about the consequences, even though growth is not growing. So the other guest said you have to cut costs or cut debt, but you also have to grow the economy. If you can grow the economy fast enough and even forget paying down the debt, just keeping the debt from growing, then maybe you can come out of this. But they're not growing. They're not seeking to cut the debt, and they are seeking to keep the free lunch. They want this cradle-to-grave protection to last. They deserve it. People deserve to have this, is the feeling, and forget the reality that we can't afford to operate the way we did. And until we realize that and operate in a real world where there's limits to our spending and the amount of money we create, you know, we're just saying buy gold here.
Let's talk about privatization. Part of the program that was approved by the Greek government, implemented by the ECB, by the European Union, the IMF, all conditions for more money were privatizations. The Greek government was supposed to sell off some of their government holdings. Now, in a year and a half, according to a report today, there hasn't been one privatization. What does Angela Merkel and Jean-Claude Trichet take away from that?
Well, on the 29th of this month, the Bundestag, which is the German, House of Representatives and Senate, has to vote on the basically expansion of the EFSF, which is the European Financial Stability Facility, which will back up the European Central Bank. The European Central Bank isn't big enough to buy all of these secondary market bond purchases that are needed of Italy. I mean, Italy's 1.9 trillion of bonds. Spain. So
they don't have enough money. The European Central Bank does not have enough money to buy up all of these bonds.
So you have a tug of war because the people in the north, Finland, the Dutch, the Germans, they want more collateral, especially the Finnish and the Austrians and the Dutch. They want collateral, so they want these asset sales, or at least they want access to those assets or the asset sales. So there are some people within Europe, some countries that actually want the collateral on one side, but on the other side, you have a mechanism, this potential bailout facility, the EFSF, that has to be expanded. That's where here's what I think will happen over the next couple of weeks, and here's how months to trade it. They need at least $600 billion more. And if they get a G7 and BRIC capital infusion or promise, that'll make the people in the North feel a lot better. Angela Merkel will feel a lot better if the G7, the Japanese, the Americans, all these other countries, maybe even China. We saw copper today. The Chinese have to be like, you know what, Europe has slowed down, our economy's slowing down. So I see a mechanism, and also think about the elections. You have the elections coming up next fall, so you have political pressure.
Angela Merkel just lost an election in Berlin.
She did, but her big election's coming up next year. So, but the Obama administration is facing an election. So I see a coordination coming, because they have to fight this with a daisy cutter, but bazooka, the way Hank Paulson. That's what I talk about in my book, A Colossal Failure of Common Sense.
Charlie Biederman, do you really think that the Europeans are going to come together, perhaps with the Brazilians or indeed the Chinese and the United States, to cobble together some kind of rescue package? What are they waiting for?
I think they're looking to see how far they can postpone doing anything until the world actually forces them to do something. I think they have their vested interest is to prolong this as long as possible. Do I think they'll actually come to an agreement and make some sense? Not anytime soon. Will they be forced to at some point in time? When that happens, they probably will. But until then, they're not going to agree to give up anything.
Jonathan? The head of the Greek Parliament Budget Office came out with deficit and revenue projections for the Greek government. She was then booted out of that office because of those contentious results. When a corporation looks to, let's say, invest in Greece, do they look at the privatization record? Do they look at the government's creditworthiness and also its worthiness in terms of meeting its obligations? Are you going to see any corporation invest in Greece based on the past results?
I don't think so. And this goes right into kind of what I do, right, as a restructuring lawyer.
Right.
When I'm representing investors that are looking at distressed assets, and you could call Greece as a whole a distressed asset, I mean, they're looking at, can we turn this around, right? If we buy this now, can we turn it around and make a lot of money later? Well, if you look at the political dysfunction, you look at everything else that's going on in Europe, you look at that Greece can't get out of its own way because its problems are too big, and we don't see the Eurozone coming in and saying, okay, we've got a plan to bail Greece out, or even if that won't work, a plan to help Greece along. I don't think anybody's going to put private money in there until they know what the outcome's going to be.
Let's just pick up on the theme about companies spending their money in Greece. There are reports that pharmaceutical companies are refusing to ship product to Greek hospitals because they're not getting paid. Is this going to be a trend? Are we going to see this in other parts of Europe, too?
Well, we very well could, but this is what happens, right? If a corporation is in trouble, right, and vendors know that, right, trade creditors know that, they will stop shipping, right? Or they're going to ship. They're going to say, we'll ship, but you got to pay us up front. Right? Well, that's happening in these countries now, right? Because we're having huge economic declines, right? So you have hospitals that are not getting the money that they need to be able to go and pay for the pharmaceuticals. Well, why would the pharmaceutical companies ship that product? They're not in the business of losing money. They're in the business of making money, right? So we could very well see that across Europe. We could see that in the U.S. We see that with corporations all the time.
So are companies stockpiling cash against those very issues?
Yeah, I think companies are stockpiling cash for lots of reasons, right? We just went through a huge economic decline, right? Larry wrote about that. We've got a huge
short-term funding seizing up, commercial paper market in dislocation.
Exactly right, and we've got a huge amount of uncertainty right now. So businesses aren't sure what to do, but also businesses use that money to invest, right? That's what they want to do. But you invest because you believe the consumers are there to buy the products or to pay for the services that you're investing in growing your business for. Well, if you don't think the consumers are there, because at least in the U.S. right now we're looking at it and the consumers don't seem to be spending, why are you going to spend that money? You're going to keep it and you're going to wait, right? We need to get some certainty. We need consumers to get confidence. We need banks to start lending to small businesses so they can start growing again. And we need to find a way to grow the economy. I think, unfortunately, we're going to be stuck in this kind of quagmire for a while.
Charlie Biederman, I want to follow up on this idea of spending. Are companies spending their own money to buy back shares? And what about corporate insiders? I know you track these kinds of things.
Well, starting September 7th, when the S&P first approached 1,200, we started seeing a complete shutdown of insider buying. Insider buying had been like 100 million a day starting August 4th, which is when the S&P started its way down, and for a week or so there was very heavy insider buying. And then as the market bottomed and started to rally, by the time September 7th, we've been averaging about 12, 13, 14 million a day of insider buying, and insider selling is back over 100 million a day. So we went from a sell-buy ratio of 1.2 to 1 at the bottom in August, which is very bullish, to over 7 to 1 now. Now, 7 to 1 is somewhat bearish, not as bearish as the 12 to 1 of June and July. So what's going on? Company insiders have stopped buying. They're afraid to buy, and I think with good reason. They're just looking at what's going on in Europe. They don't see any increase in final demand. They're worried, and so they're pulling back.
Larry McDonald, we got the results from the IMF's Global Economic Survey today. They cut their forecast for global economic growth. You think this is going to have an effect on the stock market? We're in an uptrend on a technical basis. Do you think that investors are going to start to pull back as we get closer towards the end of the year?
Pimm, it's amazing. It's so much like 2008. In the summer of 2008, Trichet wanted to raise rates. They actually were raising rates in the spring, summer of 08. And then the same thing this summer. The hawks were leading the ECB. Today, you're seeing this language out of the IMF that's leading us to believe that you could see a rate cut out of the ECB sometime in this fall or winter. But I think more importantly, if you want to take the viewers, how do you trade this market? One of the things I've been talking to our customers about at Newedge is we've never had a market like this, which is so politically driven. You have the markets, these government-induced rallies. The market goes up on euphoria and down on impatience. Up on euphoria, down on impatience. And what we're watching very closely is the TED spread. The same things back in 08, in the summer of 08, going into Lehman. The TED spread, Euribor. The Euribor is still 38% to the Lehman highs.
This is the amount that the banks would have to pay each other.
It's a measurement of how much the banks trust each other in a simple way. That is extremely highly elevated, and the high yield market is still very wide. So as we've had these 5 and 6 and 7% rallies in equities, the credit markets haven't rallied anywhere near as much. And as investors sitting back at home, that's one thing to watch out. The rallies won't mean much until the credit markets improve, and I would watch those indicators.
Charlie Biederman, give you 10 seconds. What are you doing with your money right now?
Well, short the European banks, U.S. banks, long gold, long inflation-protected securities.
All right, you sound extremely defensive. I want to thank you all very much. Charlie Biederman, TrimTabs Investment Research, Larry McDonald from Newedge, and from Kirkland Ellis, Jonathan Henes.